Yeah, I think Bitcoin too is the more interesting one because for so long, so many people assume that, again, digital gold, right? It's going to be a
Right.
store of value. It's going to be currency, even cryptocurrency. And a big thing with currency is that, yes, it fluctuates in value, but you have some faith that it's going to be a relatively stable trade. You can't wake up one morning and your dollar value is, down 30%. Now, Bitcoin declines didn't happen overnight, but we've always said it. This isn't a currency. It's a digital trading asset that is really based on risk sentiment, and it's delinked from risk
Right.
sentiment. Risk on, again, tech, all those areas that were so high flying in the first half, Bitcoin hasn't been able to keep up. And I think it's because a lot of that adoption story of, institutional investors, there's a company out there called MicroStrategy, which is a publicly traded company that their whole business model was buy Bitcoin and hold it forever. Well, now they're having to sell it because, again, the price has just come down so much that in
Hmm.
order for them to meet payouts to investors, they have to sell. There's a lot of headwinds out there for Bitcoin specifically that it's going to be pretty hard for people to overcome. And I
Yeah.
think what's even more interesting as we look into the future is digital currencies, but from central banks. So no longer are digital currencies like Ethereum, Bitcoin going to be run by these private entities, private markets. Your European Union is saying a digital euro is going to be starting beta tests in about a year or two, and they expect it to be fully live by 2030. China's doing the same thing.
I'll say this again. You and I have both said it a number of different ways, if not the same way. I don't care if it's gold. I don't care if it's Bitcoin. I don't care if it's fart coin. These things don't have earnings. It is supply and demand. You have to rely on more people wanting to buy it than sell it for the price to go up. It has nothing to do with earnings, which is why you see these fluctuations because basically everybody is just guessing and betting. Fine. That's great. But when you have 24 all-time highs in the first half of 2026,
Yeah.
and that's a function of the S&P 500 earnings expecting to go up by 24% this calendar year, you're just never going to convince me that those things are anything more than a bet, a speculation, whereas I can point to individual securities and be like, earnings are increasing. And
Yeah.
the price of a stock is always a function of how much money it's making. So, hey, if you're in fartcoin, Bitcoin, gold, any of those things, whatever. I'm not saying it's right or wrong. I'm just saying make sure you understand what you own and why you own it and what it is subjected to, because it certainly isn't a function of increasing earnings by 24% in the calendar year.
Yeah. And I
And
think
end of rant. End of my rant.
well, and the increasing earnings is such a key part of this market right now because you're
Mm-hmm.
hearing a lot of commentary out there about how overvalued that market is. You're getting some financial market and celebrities, I'll put that word in air quotes, coming out and saying the market is so expensive. The market is so concentrated in a handful of tech names. Well, first off, around the valuations, yeah, the market
Mm-hmm.
might be pretty pricey, but you can measure that in a variety of ways. There's no one way to measure valuation. It's all about collectively looking at different measures and what is the whole picture telling you. So while some people look at just price to earnings ratios,
Mm-hmm.
how much are you paying for $1 of a company's earnings? One I really like to look at is called the price to earnings to growth ratio, because I'll pay more for $1 of earnings if they're very strong earnings growth that are supporting these valuations. And so that ratio, the price to earnings to growth, the PEG ratio, PEG, that is a little bit above the 20-year average for the S&P 500, but not significantly. The 20-year average is 1.2. We're at like a 1.3. So,
Right.
yes, the market might be looking expensive if you look at some measures, but there's so much earnings growth to support it. Is it really the most overvalued market? I mean, I personally don't think so because you have the earnings growth.